So it's October and the Bitcoin price is going down. What gives? Markets take a bit of a dive today as major geopolitical tensions in the Middle East rise again. Does this mean October is cancelled? Today we look into the global economic trends to see if anything has changed, as well as talk about why markets are so hard to predict in the short term. Plus, massive billionaire and suspected Bitcoiner Michael Dell files to sell $1.2 billion worth of Dell stock. Is he getting ready to ape into Bitcoin? What's up, everyone? Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content at Swan. Now let's get into it. So October, or Uptober as we call it in Bitcoin land, officially starts today. And as we saw some extremely bullish price moves towards the end of September, so far it's been a disappointment. Reports started circulating this morning that Iran is preparing to launch another attack on Israel, and markets quickly responded with dips across the board. So what does this mean? Is the bull market canceled? I don't think so. In this video, I want to dig into why I think this is just a small blip in the radar and likely just slightly delays the onset of October. First of all, we've talked about it a lot lately on this show, but global liquidity, the best barometer for the Bitcoin price, is continuing to trend up. Nearly every central bank across the world is easing right now. In fact, September 2024 was the biggest month of monetary easing since April 2020 and is nearly in line with the rate cuts we saw during the great financial crisis of 08-09. Markets are now calling for another 50 basis point or 0.5% rate cut in the next Fed meeting in November. Global money supply is expanding, and since we know Bitcoin is the asset with the highest correlation to global money supply, or new money entering the economy, we should expect the Bitcoin price to follow suit soon. In fact, if Bitcoin continues following the trajectory of global M2 money supply as closely as it has in the past, the price is headed to $90,000 by the end of the year, as this chart from Joe Consorti shows. Bill Barhydt was on CNBC's Crypto World yesterday talking about Bitcoin's correlation with liquidity levels and how it acts as more of a levered bet on stimulus.
There was broad consensus that the Fed was going to cut rates, but more importantly, that the liquidity cycle has now started. And by liquidity cycle, I mean that there's kind of a global coordinated effort to push stimulus into the monetary systems across the world. China, Japan, the United States, Western Europe, et cetera, et cetera. Obviously, whatever the U.S. does has a much bigger effect on global markets than other countries because of the global dominance of the dollar. But many were expecting 25 basis points. Clearly, markets globally have now begun to price in 50 basis points, and the feedback from the Fed that we're going to be getting more stimulus. China announced over the weekend, I believe, that the biggest stimulus probably in 15 years, I think since 2007 or 2008. Traditionally, certain risk on assets, Bitcoin have kind of trailed stimulus and liquidity by maybe 6 to 10 weeks. And so many had priced in 25 basis points and maybe slower stimulus. So maybe there was a little bit of that. But in broad measure, Bitcoin, because it's kind of a fixed float asset, deflationary over time, tends to be more of a levered bet on stimulus, right? And on liquidity. So we would expect over the next several months, Bitcoin to, appreciate significantly versus kind of traditional risk on assets. And I would expect, it's probably 4 to 6 weeks before the fun really begins.
I may disagree with Barhydt on DeFi and crypto projects, but on this, he's spot on. On top of global liquidity, we have options trading coming to Bitcoin spot ETFs soon, something we haven't talked about much on this show, but it is a big deal and could be yet another tailwind for the Bitcoin price in the coming months once they go live. Here's a clip of Mike Novogratz on CNBC this morning talking about the catalyst of options trading on Bitcoin ETFs.
What are you hearing as it relates to the ETFs and how big the inroads have been? Obviously, there was a big move afoot when this first happened, but it's quieted down materially since then. And I'm trying to understand what's happened because I think part of the expectation was that, all these advisors were all of a sudden going to be out there marketing this stuff and it was going to shift the balance.
That's a slower process than I think the market anticipated, right? Like a lot of these big platforms are just starting a month ago, starting this month, starting next month. And so I think this will be a, ongoing play over the years, not over the months. And I just think the more different ways you give access, the next big jolt to Bitcoin is going to be when we have options that trade on the ETFs. The SEC said they're coming. I don't know if it's in 3 weeks or a month, but we will have.
And what do you
options.
think that jolt is worth?
If you look at MicroStrategy as the one place right now you can get leverage on Bitcoin as a retail investor, it trades at more than 2.3 times the value of the Bitcoin it has, mostly because of the options. It is the single, often most weeks, it's the single largest, option stock in the whole market. And that tells me something, that there's a whole bunch of young guys on Robinhood that want to play crypto and want to do it with leverage. And
what do you think happens, by the way?
So options trading on ETFs will be big, but even without, ETFs continue to buy up a lot of Bitcoin. In fact, in September, ETFs bought more Bitcoin than was mined. If this trend keeps up, the price can only go in one direction. Plus, amidst this dip due to escalating geopolitical conflict, let's not forget the BlackRock report from a few weeks ago titled Bitcoin, the Unique Diversifier. The report has a great table comparing Bitcoin's performance following major geopolitical events that shows it outperforms both gold and the S&P 500 in the 60 days following such events. So the price dip may not be over. We could go lower from here. But it's important to zoom out and remember that Bitcoin is a long-term bet, and history shows it is the asset that typically recovers quicker and more violently than alternatives like gold and stocks. In other news, rumors are swirling that mega billionaire Michael Dell is preparing to liquidate $1.2 billion worth of Dell stock to ape into Bitcoin. Dell stock is up over 58% this year and has recently rejoined the S&P 500. The rumors he is ready to ape the $1.2 billion into Bitcoin come about due to his bullish posts about the asset over the last few months, reposting Bitcoin memes, and even a tweet from Michael Saylor where he said Bitcoin is digital scarcity. Now, to put into context how rich Michael Dell is, Saylor is worth approximately $4.2 billion, while Dell is worth well over $100 billion. Just imagine if Dell decides to enact a similar Bitcoin strategy for his company as Saylor has done for MicroStrategy. Now, whether or not Michael Dell is ready to ape into Bitcoin or not remains to be seen, but the fact that someone as rich as Dell could in theory buy massive quantities of Bitcoin whenever he wants shows why predicting markets and the Bitcoin market in particular is a fool's errand. One catalyst like Dell buying billions of dollars of Bitcoin would quickly rip the price out of reach for many people, which is why it's so important to get off zero. And you can get off zero through Swan. Visit swan.com or search for Swan Bitcoin on your favorite app store and begin buying and self-custodying Bitcoin within minutes. Plus, you'll get your first $10,000 in Bitcoin purchases with zero fees. Swan has the most seamless and easy onboarding experience in the industry, and we offer many products, services, and educational tools to help make your journey towards financial freedom as easy and painless as possible. So visit swan.com and get off zero today. Before we wrap today, I'd like to bring your attention to a thread I came across that you should all check out. This is one from @ThinkingWest, and it goes into the thoughts of 18th century historian Alexander Tytler and his beliefs that democracies follow a predictable pattern that lead to servitude and eventual decline. My favorite part of the thread is Tytler's observations that democracies throughout history always collapse with the same catalyst: poor monetary policy. It's an eye-opening thread with many correlations to what we're seeing today. I highly recommend you check it out. I'll leave a link to the full thread in the description. That's it for today. Please like this video if you made it this far, share it with others, and don't forget to subscribe to the channel for more Bitcoin Signal. Thanks for watching, and until next time, TikTok, next block.